Okay, we are live. Good afternoon, everybody. I'll just start by introducing myself. I'm Connor Cowman. I'm the Head of International Business here at Prime Philippines. And of course, I will be the host for today's webinar. So thank you all for joining us. This is the fourth installment of the Prime Radar series. And today, as you already know, we will be discussing the industrial opportunities in Visayas and Mindanao. So very exciting. Our webinar will consist of two parts, starting first with the Prime Philippines, Visayas and Mindanao Industrial Market Report. So that will be done by Francis. That will be the start of our webinar. And then afterwards, we get our wonderful guest speakers involved in our leadership roundtable discussion a little bit later on. And of course, as always, everyone in the audience, thank you for joining us again, can participate by answering the polls that will be posted throughout the duration. So be sure to watch out. They'll be popping up on the side of the screen. Please get involved. We will more than likely reference the answers to these polls at some point during the webinar. So your input and your answers are valued and very important. So we are very excited this webinar. And once again, to our guests and everyone who has joined us at home, in the office, or wherever you may be, thank you for being here. Okay. So to kick things off, I'll actually just introduce the panelists for today. As I say, the panel discussion will be a little bit later on, but I'd just like to give everyone a quick introduction so the audience know who we've got here, because we have, as you can see, some fantastic guests. So first we have Mr. Patrick Avila, Head of Industrial Parts and Real Estate Logistics at AyalaLand Logistics Holdings. Welcome. Well, we really appreciate you joining us this afternoon. How are you?
I'm good. Thank you for the introduction, Connor. I am with AyalaLand Logistics Holdings Corporation. It is the industrial park arm and real estate logistics arm of AyalaLand. We have developments in the industrial parks under what we call the Techno Parks brand, and our real estate logistics for our ready-built facilities under the e-Logis brand. I will be given the opportunity later to discuss this.
Of course. And yes, later on in our panel discussion, you will all get the chance to really get into what you're doing, and Ruth will be asking some questions a little bit later on. So we'll get into some more details there. Thank you very much for your introduction. Look forward to hearing more from you later on. Up next, we are fortunate to have here with us Mr. Felix Taguiam, and I hope I pronounced that correctly. So please.
Yes.
Okay. That was it's all good. Okay, so thank you so much for joining us. President of Deco Sales Incorporated, and of course the Cebu Chamber of Commerce and Industry. Good afternoon. Thank you very much for your time today.
Thank you for inviting the Cebu Chamber. It's an honor to be in this very important event, and we will see if, what we can do to help each other, either in Cebu, in Davao, or in Manila, or anywhere. And especially if Ruth has an office in Cebu, welcome to Cebu Chamber also. Please do. Hope in the future, under the new norm, with the airlines opening up, we can see face-to-face in June. Thank you very much.
Thank you. And really the pleasure is all mine. Well, all ours at Prime Philippines for you joining us today. We're very excited to have you here with us. And I share the same sentiment. Hopefully, very soon we can all be doing this in person.
Thank you.
Up next, we are fortunate to have with us as well, and actually returning on the Prime Radar webinar series, Mr. John Tria.
Yes, good afternoon, and thank you for inviting the Davao City Chamber.
Of course, it's always a pleasure to have you with us. So yeah, welcome back. You've been
Thank you.
invited again, so must be doing something right. Truly a pleasure again to have you here with us, Mr. Tria, and we look forward again to hearing a little bit more from you and what's going on your end in Davao City a little bit later on in the roundtable discussion. So, finally, I would like to introduce Ruth Coyoca from Prime Philippines. She is our head of property advisory for Visayas and Mindanao, and she will be serving as our moderator for the roundtable discussion a little bit later on, as I said, this afternoon. So, good afternoon, Ruth.
Good afternoon, Connor. Good afternoon, everyone. I am so excited to start throwing in my questions to our esteemed panel. Looking forward to that. We can start already.
Yeah, and it seems like everyone is very excited as well. Everyone's raring to go and give their insights. So very excited for that, and that will be coming up very, very shortly. But first, as you can see, we do have one more participant here with us today. Francis Mina of, again, Prime Philippines. He's our head of research and advisory, and he will be kicking the proceedings off with the report on Cebu and Davao industrial market. So, before you start, Francis, again, as I mentioned, guys, we are having poll questions throughout this afternoon, and I would like to actually bring the first one to your attention already before Francis starts. Give everyone a chance whilst Francis is presenting to answer that. Okay, so if you just take a look, as mentioned, on the side where it says polls, nice and simple. And the first poll we have here today: where in Visayas and Mindanao are you most bullish in terms of development and industrial activity? So you can see the options we have there: Cebu, Bacolod, Iloilo, Davao, Cagayan de Oro, other areas in Visayas, or other areas in Mindanao. So, as mentioned, everyone who's listening, please do get involved with your answers to the poll on the side of the screen. And now, that's enough for me. I will hand over to Francis for the first part of our webinar. Francis?
Okay, so to start things off, I'll be discussing Metro Cebu, then Metro Davao, then we'll just be touching a bit on the current demands and opportunities we see in these two areas before we proceed to our panel discussion. Okay. So first off, with Cebu industrial sector overview, what we're showing here is a map of the current ecozones we're tracking. So basically what we've seen is concentration really is still in Lapu-Lapu. So there are 3 major ecozones in Lapu-Lapu City, and in terms of Mandaue and Cebu, we see large clusters of warehouses in these areas. But outside of Metro Cebu, we also note that there are growing ecozones in the area already, some of which include Naga Valley Industrial Park, or NAVA, which caters mostly to light and medium industry, as well as West Cebu Industrial Park, which caters more to medium and heavy industry, mostly within the shipbuilding side. So what we've seen now is that of the 8 operating, there are 8 operating ecozones right now with 1 proclaimed. Total land area is at 878 hectares, but we're seeing that the Cebu industrial landscape is really priming for growth. In terms of expansion, PEZA wants to expand further the Mactan ecozone and the like, and because they want to really address and bring in more revenue in the side of it of industrial. In terms of industrial performance, we noted the industrial lots. Selling prices are at peak within Mandaue, followed by Lapu-Lapu and Cebu. So price ranges from around 10,000 per square meter to around 20,000 per square meter. It's very interesting because what we've seen mostly among the different property sectors is industrial remains as one of the more resilient sectors. In terms of property acquisition, even with leases, current rates of lots and warehouses are more or less stable. There is minimal negotiation still to date. So it's actually one of the sectors that we're really seeing moving forward within the pandemic to really continue in terms of growth of rates. While the narrative for lots is more towards Mandaue, it's very interesting that in terms of warehouses, larger rates are seen within Cebu, followed by Mandaue and Lapu-Lapu afterwards as well. As we know, Cebu came from a brief period of returning from ECQ to GCQ and back to ECQ. And in terms of demand, what we've seen is really a large pickup in terms of logistics and warehousing, nearer to the areas of nearer to Cebu City, largely because a lot of the consumers are in these areas. And as we can see in terms of rates, lease rates of warehouses gradually taper off as they go farther from Cebu City. In terms of ecozone locators by enterprise, around 80% is really focused on exports. Of these items, it's mostly electronics, automobile parts, and currently ship parts. This is something that's currently driving the economy of Cebu, but we also want to see moving forward a bit of diversification, which we'll be talking on later on when we discuss opportunities. Real estate covers around 13% of real estate activities in these eco zones, so it's still a sizable portion. These are mostly within leasing of warehouses, some opening their lots for lease as well, and a bit banking on resale. In terms of demand drivers, what we've seen really in Cebu is a push towards e-commerce. And I'm sure later on it will be discussed by Mr. Taguiam that there really was a large shift in terms of, because of the lockdown, where a lot of purchases were now being made online. Actually, I'll be discussing later on, but just to jump the gun, e-commerce, not necessarily the likes of Shopee and Lazada actually have the largest warehouse demand. It's actually the logistics companies that are catering to these platforms that are really booming in terms of warehousing demand right now. So it's really the shift towards going digital and trying to make goods more accessible, because people won't be able to go to malls, they won't really be able to go out. There really was a shift towards being able to bring each and every item purchased to each and every house in Cebu. We also looked at the current cargo traffic. It's very interesting for us in seeing that from 2016 to 2019, there really was gradual growth in terms of cargo. So growth ranged from around 4.9% to 9.8% compound annual growth rate from 2016 to 2019. But of course, given the pandemic, we saw that growth tapered off. It decreased by around 35 to 50%. But this is something that we see as mainly just the cause of the pandemic. We're really looking forward to the coming years, 2021, 2022, where we expect that there will be recovery in terms of our cargo volumes. We see that in terms of prepping for this upcoming cargo demand, we see that infrastructure is already being prepared in order to cater to these. So specifically, two of the ports we're currently monitoring are Pier 5 and the new Cebu International Container Port, or NCICP. In terms of their positioning, what we see, based on their positioning, Pier 5 will be catering mostly to domestic cargoes. So it's additional capacity where we can bring in various domestic cargo, while the NCICP will be envisioned to be the main international port of Cebu. So for property owners who have land banks near these areas, these are things that we really have to track and look out for should we decide to push through with our industrial developments. Aside from this, of course, one of the main highlights we currently see in Cebu is the Cebu Cordova Link Expressway. So aside from loading traffic, and I've been to Cebu really in last year and early this year, it gets really congested at some point in the areas of Mandaue and Lapu-Lapu. So the CCLX will look to offload this, be able to divert some of the traffic towards Cordova and towards the South Road Properties area. So it's a good opportunity, really, especially for the municipality of Cordova, where there is currently limited growth. But with how we've been tracking the different landlords, there has been movement in terms of either liquidating properties to already cash out, or prep their properties either for industrial or commercial developments. So Come the completion of CCLEX, last update we got was, I think, this month. It's already at around 61% complete. Upon completion, we expect further growth in the areas of Cordova and towards the southern side of Cebu. Moving on to the Davao industrial sector. Davao industrial sector, as seen on the map, it's still one of the rising. Davao industrial parks are still within the stages of rising. We plotted out a lot of the industrial parks there, but for the most part, they only 2 to 3 are focused on manufacturing, while the rest are really focusing on agri-industrial. In terms of location, we noticed that these industrial parks are actually outside of the major Davao CBD. It's towards along the Daang Maharlika Highway, where some of the ports of Davao are actually currently located. Aside from this, we see growth in terms of industrial parks even farther outside. So we have developments like Davao Oriental Eco Industrial Park. We have Hio Industrial Estates in Taguiam. And recently this year, I think it was around June, where the Davao del Sur Industrial Economic Zone was finally proclaimed. So from what we've seen in terms of selling prices, Bunawan is top line in terms of price per square meter. Why? Largely because it's nearest to Davao CBD. Other areas currently have industrial lots for sale right now, lots and warehouses. So in terms of warehouses, what we see is top line in terms of rates are Panabo and Bunawan. Bunawan, as mentioned a while ago, is largely because of the distance towards the CBD. While Panabo, they have a top line of 220 pesos per square meter. This comes from Anflo Industrial Estates in Panabo. It's right next to a port, which is a very strategic location to be right now. So, in terms of growth, industrial has really gone outside of the CBDs towards the fringe areas of Davao City. In terms of locators, what we've seen is a bit of a difference from Cebu to Davao. Cebu is mostly electronic parts, while for Davao, a lot of it really is food products and beverages. It's something that they actually highlight, where the products they produce they both produce and manufacture these products. Aside from this, they also manufacture rubber and plastic parts, as well as wooden furniture. As mentioned, same with Cebu, real estate activities are at around 15% within these industrial parks. In terms of container traffic, it's more or less the same narrative, where it's been growing from 2016 to 2019. Though because of the pandemic, we saw a large drop in terms of cargo traffic. Though what we'd like to highlight is for container traffic, foreign container traffic is actually the same in terms of performance as opposed to 2019. So it's a bit of an outlier and a bit of a good sign that at least within Davao, there is still semblance of positivity despite the pandemic. In terms of the trends we see in Davao, there is actually a growth in terms of warehouses and parks. As shown by the map a while ago, there are growing industrial parks outside the metro, and there have been property owners who have started utilizing their properties already for industrial warehouses, mostly in the fringe areas outside of the Davao CBD. This is largely backed by e-commerce, as it's the same scenario with Cebu, wherein e-commerce drives purchases. There is a need for logistics to really accommodate this large demand, and they're now currently locating within the CBD and in areas a bit outside. Aside from this, what's unique about Davao is there really is a strong push towards agriculture. So whether in agri-industrial or agri-tourism, it's still an integral part of Davao growth. So it's something that pushes the growth for warehouses and industrial parks as well. Two of the developments we're currently tracking, of course, there are more that have yet to be disclosed or are currently in the works, but one would be Central Hub Davao with Double Dragon Properties. It's a large-scale logistics firm that is 8.2 hectares, and it was set to open at around 2020, but we still have to see if there were delays in terms of construction. The other would be Davao Oriental Eco Industrial Park, where due to its roots of being nature-focused, they're looking to bring in more green facilities, and they're trying to establish an international port for their cargo vessels. What's back what's backing Davao really is this push towards infrastructure. As shown in the map, we have, aside from the Mindanao Railway Project, which is really one of the more ambitious projects for Mindanao, connecting the entire island, we see a lot of road network improvements, including bypass roads, coastal roads, and expressways, which serve to ease traffic and be able to provide further accessibility for industrial and logistics companies. So basically what we see now in terms of demand and opportunity, what we're showing here are the current demands by property sector first. So that's a pie chart on the left. We've seen really a shift in terms of demand, where in the past our company used to caters a lot more on the commercial side, office and retail. But now urgent real estate requirements, meaning requirements that they want to move in by 2020, are at 89.9% of current demand in Visayas and Mindanao. Office is at 7.5%, as there are still continuous companies trying to expand. And retail, of course, being one of the more hit industries by the pandemic, is at 2.6% in terms of inquiries. Interestingly, from the industrial demand, 86.8% are within logistics, with 6.6% each for distribution and others. But it's really mostly logistics that is driving demand right now, as consumers are really in need of having their products brought home to them. In terms of location, from our tracking, it's been 51% Metro Cebu, of course, because of the current development already in Cebu. Second would be Davao at 35.4%. And last would be 13%, the other areas in Visayas and Mindanao. Of this 13%, a large part is in Cagayan de Oro. So it's something that I think Patrick will be talking about later on. And in terms of our tracking, we tried to observe the impact of e-tailers, or it's a play on retailing, and because it's all done online, we call them e-tailers. So e-tailer demand, direct demand for industrial space is at 6.9%. So it's a small piece of the pie as opposed to logistics, traditional warehousing, and the like. But as mentioned a while ago, e-tailing has minimal impact in terms of industrial demand, but its spillover to logistics is really pushing the demand, reaching up to 86%. Opportunities we see in the industrial sector. First, industrial parks. Main reason why is we see that companies are now employing what we call the +1 initiative, where +1 meaning, it's a shortened play on China +1, where because of the current global supply chain difficulty we experienced during the earlier parts of the lockdown, companies are now looking to diversify to be able to be more agile and look for other areas where they can set up manufacturing operations. So currently, a lot of the companies are in China. There was a recent report where, as of June, around 33% are actually looking at areas outside of China already. So the current targets include India, Vietnam, and we want the Philippines to take part of a piece of the pie in this. Aside from this, we still have current tax incentives, and they're currently under works. I think there are still discussions with the current create law. So pending tax incentives is something that can really serve as one of our advantages. Aside from this, we're looking at diversification of exported goods as another opportunity. Currently, we're more focused on automobile, certain parts, ship parts for some areas. But once we're able to diversify, we're able to mitigate risks in terms of our global supply chain. So opportunities for industrial parks include lot sale outright for local companies, long-term leaseholds of 50 years, renewable for 25 to 50 years, and warehouse leases for company-owned facilities. For existing facilities, because of the current large demand we see in logistics, requirements are either existing warehouses or build-to-suit warehouses for those logistics companies that have really specific demands. So for property owners who have stagnant warehouses, this is a viable opportunity we can maximize. Aside from this, for those who are looking to stock up in terms of cash and be able to prepare further for the pandemic, sale opportunity is something that's actually faring better for industrial as opposed to other property sectors. As with other property sectors, we've been tracking a higher margin in terms of negotiated rate in terms of sales, as opposed to industrial, where there has been minimal movement in terms of rates. So basically, what we've seen is there really has been a shift towards a buyer's market for the other sectors, while for the industrial sector, it still falls mostly within the seller's market and the balanced market. Yeah. So that concludes our presentation. Just to introduce ourselves very quickly, we are Prime Philippines, an end-to-end real estate consultancy firm. We do research and advisory, and we're basically we try to help our clients adjust to this new normal through different consultancy services, brokerage services, and advisory. For locators who are looking at warehouses, and for logistics, we have a few properties in the market right now, though we just like to highlight that these are normally fast. There is very high and fast take up in terms of industrial, so you may reach out to us later on should you have requirements. So that's for the presentation. Thank you. Please take it away, Connor.
Okay, Francis, thank you so much for that in-depth report. Some fantastic information there. I hope everyone was taking notes. However, if you've not been taking notes, then don't worry too much, because we are releasing a comprehensive report a little bit later on. I will speak about that. So you'll have a chance to revisit some of the information that Francis has discussed and find out even more in that report. So Francis, once again, thank you very much. And I'd just like to ask all our speakers, if possible, to find the video button on their screens to turn their videos back on. I thought I'd be able to do it from my end, but apparently not. Okay, Patrick's back. Okay, Felix is back. Yes. Just waiting for John now, and then we're going to proceed to our roundtable discussion. Before we do, however, I would just like to note that I've been reading through the chat on the side, and it's super interesting to see people from all across the Philippines tuned in for today's webinar. So I'd just like to say, once again, thank you all very much for joining us. Also, please feel free to discuss in the chat or post any questions that you may think on today's discussion. And let's get active in the chat and let's all discuss what's going on today. Anyway, we will now proceed what is the main event of today's webinar. And I can see everyone, all our guest speakers are now back with us on video, and they all look very excited to impart some knowledge and get on with the roundtable discussion with Ruth. So, without further ado, I shall hand over to Ruth, and we shall begin the roundtable discussion.
Thank you, Connor. Thank you, Francis, for that very insightful presentation of our most recent market report. All right, so for this roundtable discussion, we have some very interesting questions that we gathered prior to the webinar. But should the audience have other questions, please feel free to use the chat function, and we will look to address this directly or in the course of the webinar. All right, so our esteemed panel are comprised of representatives of the Chambers of Commerce of Cebu and Davao City, along with the head of Ayala Logistics Holdings. Along the way, as already mentioned by Connor a while ago, whole questions will be popping up, so please respond to this, and we'll be discussing the results as we go along. And speaking of, let's take a look at the results of our first poll. Okay. So with the question, where in Visayas and Mindanao are you most bullish in terms of development and industrial activity? We've gathered 37% who answered other areas in Mindanao, followed by 35% who answered Davao, and 17% who answered Cebu. Sir Patrick, it looks like we have a lot of audience here who'd like to also follow the path that Ayala took. So it's very interesting to see these answers from our attendees who are from various backgrounds in the real estate business. Now, we would want to know what our esteemed guests think about this, as this is closely related to our first panel question. So without further ado, gentlemen, Let's begin our roundtable discussion. So starting off with the first question, are there specific locations in Visayas and Mindanao that are seen to be performing better than the others in terms of industrial demand? What are the factors that seem to be contributing to this? Okay, so from what we've seen, demand has spread to different locations in the country. Well, we have to, of course, acknowledge that large industrial activities that happens in Luzon, we see substantial movement in Visayas and Mindanao region as well. So I'll start off with Sir Felix. Sir Felix,
Thank you.
we were in lockdown for a while in Cebu. I myself experienced the close open kind of quarantine arrangement in Cebu City. We were just talking about it a while ago.
Yes.
You know, from ECQ to GCQ, back to ECQ,
ECQ to GCQ.
and now MGCQ, but for 2
MGCQ.
months already. Yeah, so would you care to kick things off with how Cebu and Visayas as a whole has been doing and where the current hotspots are for the industrial demand?
Well, you know, the complete report of Francis made a while ago, as if Francis is from it. Are you from Cebu, Francis? Your report is so comprehensive that I would really say I would like to get that one copy also. But anyway, nevertheless, let's go back to the question. You know, for the past 5-6 years, Cebu has been growing exponentially, and I would say out of hand. We grew from a low point to where we were today till before the lockdown. Now, but after the lockdown, things changed a lot. It went from what we say a V curve shape. We were this high, we went down, and we are trying now to pick it up. But you know, situation is different nowadays. Retail sector, the hotel industry, the restaurant industry, the loser side, the downer. They're the downside. The loser is a bad word to say. Sorry, no. Let's say the downside of the business. But Cebu, as we may know, is huge when it comes to tourism. Under DOT surveys says that almost 55% of all tourists in the country passes through Cebu, the Cebu International Airport, the latest one, the Terminal 2. IT, BPO. We are now before the pre-COVID, we are now probably the second biggest next to Manila. But even though after the lockdown, Cebu, the IT sector still thrives, the winner side. So demand for industrial estates, so far in the export processing zone, companies are still there. But we do see, and you may heard from the news, that there are some sectors in the industry, like the garments industry, it's a ripple effect thing. If the principals from the United States or from Europe does not order, the demands here of production will get less. And in fact, you may heard also that there are companies that are retrenching in the garment sector. But in the other side, the automotive sector is great here. The electronic sector is very high. So far, these are the prime movers of the export economy in Cebu. As what was explained in the graph in the presentation a while ago, we have 8 industrial zones, but mostly concentrated in the Mactan area. The MEPS one was the oldest. It's the oldest since 1976. Started in 76. The first company was Timex. It now grew to almost 250 foreign companies, employing around roughly 150 or 175,000 workers in a 3-shift, 24-hour. As of date, it's still there. The only problem that we may have experienced now is, since MEPSA, we call it MEPSA here, Mactan Export Processing Zone 1, 2, and the Clips, the Cebu Light Industrial Park. Under the problem now is the MEPSA has been more than 30 years, and some of the incentives has been already reduced And these are the claimor of the exporters through the help of the Cebu Chamber, that we are also helping to ask the government to bring back the incentives. Now, the incentives that has been expiring already under NEDA rules or BOI rules is not only experienced in Cebu. It's been experiencing all over the country, all the export processing zones. But now we are asking the government at this time of pandemic, we cannot afford even a company that will say, I'm moving out. We may heard stories that there are hundreds of companies moving out of China, but where are they going? Where are they going? They're going to Vietnam. Where they're going to Cambodia. They're going to Thailand. But why? Why not here in the Philippines? Because we have to, we together here, the prime group, we have to help each other. We have to tell the government that we have to reduce our independence on what our taxes are so. That's a primary complaint of the exporters here. No, we have high taxes. The cost of power is high. No, then even we have manpower is getting higher also. But anyway, we have a huge talent pool for the industrial estate business side. I will say that's part of it. But in Cebu, we can say we can say we have another upside. The BPO sector, the BPO BPM, we have a huge talent, the talent of English speaking. Now we are now ranked. We're ranked by Tolon's. I think we're now the sixth biggest in the country in the world now for BPO for the business procurement outsource, or even the voice and non-voice, the two of them. So, in fact, during the lockdown, as what was presented before, instead of doing on a actual face-to-face, go to work, go to IT park to work, 50% of all the IT industry now are now work from home. No, with the improvement of the infrastructure project by the two telcos. Now we're happy that the third telco is coming in, although they're laying down the cables in Cebu, but it will still take time to improve. But we are going there with the third telco in, and with more high band. We call that high bandwidth. If the high bandwidth is better, we will surely have more business, and we will have more business. We will have more economic activity. It will turn down the ripple effect. This will affect every business sector that is in the downline. No? So what else? Retail. Now I have touched export. I have touched the ICT. Tourism. Tourism is the downside as of date. They're huge in Cebu, especially in Mactan. You have been here, Ruth, diba? You see Cebu, the tourism. Now, what happened now? Since there's no airline, so there's no tourism. But the provincial government, through the DOT and the local, we're now opening. There are now, as of yesterday, there are now 132 hotels that are now open. But we're doing the travel bubble thing. Now, we are now telling people to travel local, because there's no way of going out, because there's no international flights. If there is, maybe one or two only, but not much. No? And nowadays, if you go to hotels, used to be what, at the high end of $100, $200. Now you can see at the very low end of $50, $60 only a night. No? Secondly, what else? Although we should, health protocols should be in place. And the health protocol in Cebu is very stringent and is very tough. I can really say that. No? With what our group has been doing, the Project Balik Buhay, together with Secretary Simato, we have really down seeing the downturn, the lowering of the curve. But we should not be complacent. No? What we experience in Cebu you can experience in your own locality, either it be in Luzon or in Mindanao. No? So right now, the only thing that the business sector has to improve now is the business confidence. after the long lockdown here in Cebu, and you may have also experienced in your end also, imagine 6-7 months of lockdown. Now we are now open. Malls are open, but the consumer confidence is still very low. And if you don't have consumer confidence, you don't have consumer spending. If you don't have consumer spending, there's no purchasing power. If there's no purchasing power, it turns down to the ripple effect 7 times. No? And down to the grassroots, it's there. So health is still wealth. No? So people now are more health conscious, and we have been locked up too long that everybody is now has the fear of going out. That is now we have to bring that back, the confidence.
Right.
So that's it. For what I have experienced in Cebu, I can really say we are willing to help everybody. It's not really Cebu. Manila may have a different problem because of the huge population. Davao is a big city, bigger than anywhere else in the world. Diba? So we all have our own, we are good in our own way. We should do the most important thing is our health protocol. We should follow the new norm now. The new norm nowadays is never in our handbook. It was never written. Nobody knows about this. It just so happened in our generation. So we are now learning from ground zero to what we are now. Economically, there's no other way. It has to go up. Everything is in a depressed mode. As what Francis says, rentals are now easing off. They're easing off. But sooner or later, it might pick up. Everything might pick up again. So we hope that in the future, we can share with each other notes and we can see what we can do to alleviate everybody. The important thing is our people should be safe. That's all. Thank you.
Yeah, totally agree, Sir Felix. Health is wealth, no? So we shouldn't be complacent.
Yeah.
But you know what? Cebu now, being the epicenter of recovery, as also what we're talking about a while ago, no? We're expecting that the consumer confidence will definitely pick up. It's actually good to know that there's growing demand from the industrial sector in Cebu despite the pandemic. And that they're looking not just in the Lapu-Lapu area or the Mandawi City area, but they're also looking to explore outside, even as far as in Naga or Mindanao part of the region. Yeah.
Right.
Okay, so a while ago during the presentation of Francis, there was mention of industrial parks in Cebu, and from what we've seen, Cebu has substantial supply pipeline within the metro and even around the island.
Correct.
Davao, on the other hand, has a different story. John, would you care to provide insight on Davao side, with it already setting itself up to accommodate higher industrial demand? Where are the current hot areas in Davao City and in Mindanao as a whole? And which areas do you see that industrial developers can focus on developing warehouses and industrial parks?
Okay, thank you. No? First of all, good afternoon to everyone and maayong hapon sa tanan. No? Felix made a very good discussion earlier, and I hope I'm equal to the task. Basically, the Davao region already has several new peso zones. So I'll expect a lot of interest in many of these. At the same time, we have many new mixed-use developments that are ripe for IT BPM investments. I'm sure, Ruth, you're familiar with many of them. They're already being constructed as we speak. And after the lockdowns, construction has resumed. Now, as far as industrial development, Mindanao's industry is really closely tied to its agriculture and its resource base, which is really minerals. That's why you see a lot of industrial hotspots in northern Mindanao, particularly in the Cagayan de Oro area where you have the Fividec Industrial Estate, in the Zamboanga Economic Zone, and the industries there in many areas actually serve the needs of the fish industry, General Santos also has a special economic zone, which is mainly for the fish again, seafood. Then Davao has a lot of new ones. As mentioned by Francis earlier, the low-hanging fruit is really the agribusiness because especially now there's going to be a drive towards innovating on the banana industry, which is the biggest agri-export of the country, the pineapple industry as well, and new commodities include durian for export. So you have already a new set of commodities that are seeing more markets. Coconut industry, Mindanao is still the biggest, and the Davao region in particular is still the biggest coconut producer in the country. I think almost 40% of the coconut comes from here. That's why there are several coconut processing plants here. So I would think that the low-hanging fruit will be the agribusiness or agri-processing. And eventually, a lot of what I call the import substituting industries. Like for instance, when the pandemic started to hit, we realized that we don't have a rubbing alcohol plant in Mindanao, despite, being a population of 25 million. We suddenly realized that nobody here makes a high volume of bath soap, of toothpaste, of alcohol. And so I think the need to really create that capability to locally manufacture these essential items will be necessary. Secondly, there's also a need to improve on our poultry and livestock or meat processing capabilities to meet the needs of a lot of the meat processors based in Luzon. Recently, there's been some controversy over importation. So I think that's going to be a big area for investment. And the pandemic has actually created this need to see how we can create local capability. But the pandemic is just the icing on the cake. We've already experienced issues like delayed shipments as far as 2013. I don't know, Felix, if you remember, there was this port congestion in the South and North Harbor. You remember because you're in logistics. We experienced a lot of delays in shipment of a lot of transship items.
Grabe.
So the lesson there was a lot of local producers started importing direct.
Correct.
Diba? I mean, Felix, you know this. So
yes, really.
And another issue is when there are calamities, the Roro cargo from Luzon gets holed up in Sorsogon and in Leyte.
Correct.
For days because resumption of the ferry service, sometimes the trucks are backed up, kilometers long. And
correct.
Sometimes it takes a week to just to load on the ship. So, a lot of these issues really demand that we really establish manufacturing in Mindanao. Now, what's the future opportunity I'm seeing? Of course, the 25 million Mindanao population is by itself a market. Okay? I mean, a market at least for consumer goods. No? That's one. Then secondly, you also have what we call the BIM-Iaga area, the Brunei, Indonesia, Malaysia, Philippines Growth Corridor. North Sulawesi in Indonesia will need a lot of consumer goods, and so will the Bornean Islands, which is near Zamboanga City. So I foresee these areas to really, blossom, maybe over some time. So this, I believe, will be the future hotspots. So in Davao, you still have the low-hanging fruit, which is agribusiness, although there will also be a demand for a lot of import substituting manufacturing. And therefore, the challenge, I believe, is for the real estate sector to start marketing our industrial facilities more aggressively. Because one of the opportunities we've seen, and I think that's one of the questions, is that intercity road networks have vastly improved over the last 3 years. I think, Ruth, you're aware of this. When you drive to Gensan, it's practically a 4-lane highway. Driving to Cagayan de Oro is also a 4-lane highway, a far cry from what it was when I was in college, no? And a lot of intercity roads have improved, even to Cotabato, to Butuan. So I think the logistics provision will follow because the roads are already there. That's why I believe locating your manufacturing in Mindanao will be a good bet, especially for the, and I know the brokers here are familiar, no? The mid-level manufacturing facilities or companies in, for example, the Kamanava area. I know there are many companies there, the ones who produce snack food, health products. So they're not really big manufacturing, but I'm sure they can benefit from the fact that in Mindanao, we have lower costs. Across the board, the costs here are lower, no? From proper property acquisition to power. So they can benefit really from that kind of capability, plus recent programs of the Department of Trade and Industry, such as the Innovation Law that was passed in 2018, puts forward a program of innovation. So many of these mid-level manufacturing companies, many of them family businesses. I know your past president, Nona Espeleta, is an expert in family business. Many of them will benefit from a lot of these innovation programs that can further lower their cost of production. And, overall, when you have a Mindanao factory and a Luzon factory, your overall unit cost, I hope, or I think, will go down. And that makes everybody more competitive. Now, rather than importing the balance, it might make sense to actually locate your manufacturing, at least a portion of your capacity, anywhere in Mindanao. Yun lang po.
Thank you, Sir John. I hope our audience are taking notes, no? Press John here has shared low-hanging fruits such as agribusiness, importation businesses, and available opportunities you guys can take advantage of, especially for those who are already planning to look into expanding in Mindanao. Okay, moving forward. Patrick, I know we've been talking about Cebu and Davao mostly, but your case in Ayala is very unique that you can be considered early movers for industrial, no? Whether in your existing parts in Laguna and Cavite, and now in the pipeline are your Pampanga and Laguindingan, Misamis Oriental industrial parks. Would you care to tell us more about your Laguindingan Industrial Park and what industrial demand does Ayala Logistics look to cater to in this area?
Thank you for that, Ruth. And again, thank you for the opportunity to talk to you guys and present our developments, and at the same time share our inputs in the industrial and real estate logistics segment. Before I answer the question, let me just give a brief introduction on who AyalaLand Logistics Holdings Corporation is, or AllHC. So as briefly mentioned earlier, AllHC is the arm of AyalaLand, engaged in the development of industrial estates and real estate logistics, or what we call the ready-built facilities. You might have heard about Laguna Technopark. It was established 30 years ago in the cities of Santa Rosa and Binyan, Laguna. And after that, it was followed with Cavite Technopark in Naik. And quite recently, you mentioned earlier, Laguindingan Technopark in Laguindingan, Misamis Oriental, and Pampanga Technopark in Mabalacat City, Pampanga. All of these are under the brand Technoparks. Our real estate logistics, on the other hand, or our ready-built facilities, are housed under our A-Logis brand. And we have close to 200,000 square meters in our portfolio in 5 locations in Luzon. So you might have noted that we have a really good presence in Luzon already. We have 4 industrial estates. We have 4 industrial estates in Luzon, and it is high time for us to expand beyond Luzon. So in 2019, we looked into Laguindingan Technopark, into Misamis Oriental, and it's actually part of Habini Bay. Let me start off what Habini Bay is. Habini Bay is a 526-hectare master planned estate located in Laguindingan, Misamis Oriental. And the aim for this one is to promote inclusive growth in northern Mindanao. And it's very important for us because it's strategically located adjacent to the Laguindingan International Airport. And it will provide a diverse mix of developments to create a new lifestyle option and business opportunities. Now, Habini Bay will be anchored by Laguindingan Technopark. Earlier mentioned, it was the development in Cebu and Davao are mostly Philippine Economic Zone Authority industrial estates. But for Laguindingan Technopark, we have registered this as a domestic industrial zone with Board of Investment. The total master plan is actually 105 hectares, but right now what is available on our phase 1 is about 62 hectares, and it will cater to light and medium non-polluting industries. We always make it a point, we always stress the non-polluting industries. And our target clients are manufacturers, logistics and utilities providers, and agro-industrial, among many others. And why are we doing this? It's actually based on two fronts. First is to basically provide a new and professionally managed industrial estate. As we take care, we as the developer take care of the safety and security. We build the necessary infrastructure and facilities. We foster partnership with various stakeholders, such as the local government, the nearby communities, so that our locator companies, our partners in the park, can simply focus on their business operations. And the second one is that we, in the past, we remain a committed partner in nation building. And we do that by improving the quality of life of our Filipinos, our fellow Filipinos, as we provide platform of providing employment opportunities. Now, we have actually asked earlier, Ruth, why Mindanao? Why Mindanao? The question for that is actually why not in Mindanao? But to give further details, AyalaLand, the company has been invested in Mindanao for over a decade. We established about a decade ago through Abriza Estate in Davao and Alegria Hills in Cagayan de Oro. We opened Ayala Mall Centrio within Centrio Estate in Cagayan de Oro and Abriza Mall, a mixed-use development offering residential and commercial uses. And quite recently, we have launched as well a Cove also in Davao. So that's the first one. We have been invested in Mindanao for the past several years already. Second, we also want to tap and grow new markets. That's basically to create value for more Filipinos. We are known to create value of the land over a short period of time, and we want to bring our experience and track record in building sustainable mixed-use estates in Misamis Oriental, where Habini is. And lastly, there are various potentials, big potentials for Mindanao. The infrastructure development, especially for northern Mindanao where we can tap into the Visayan islands, and we can tap into the Mindanao market, as well as the population, the economy, the natural resources. So basically the potentials that we can tap into Mindanao. That's why we invested in that part of the country.
That's very good.
Yeah.
Go ahead, Sir John.
Wala. No.
Okay. Yeah, so it's very good to know, no, Patrick. Actually, it's really about the foundation, no, of the Mindanao. As also mentioned by Sir John, the population, the infrastructure projects there. Those are really good reasons why a businessman should, explore, take a look into this region, as well as, of course, the Visayas region. So thank you for sharing that insight. Actually, what an interesting insights from our panelists. And we are just getting started. That's just our first question. And what really is an exciting time, that despite the pandemic, we are experiencing and anticipating industrial demand both in Visayas and Mindanao region. So before we proceed to our next point of discussion, I can see the results of our second poll is out. With the question, will industrial activity be one of the strongest drivers of our economy post-pandemic? 88%, majority of the audience answered yes, and 11% are quite uncertain with the industrial sector, activities post-pandemic. But for the past 7 months, despite the health crisis, we've seen that the industrial sector is really one of the most resilient industries. In the real estate sectors that continue to survive, not just survive, but also thrive. Based from our personal experience, if I may just share, we've been helping these clients secure warehouse spaces, industrial lots for sale for their overflow supplies. We even have clients that pivoted or shifted from tracking business to food distribution just to serve the growing demand in the food distribution industry. And we've been getting a lot of inquiries for warehouse needs from the startup e-commerce businesses, because as already mentioned by Francis a while ago, it's also one of the booming industrial businesses now. And I think the audience agrees when I say that this sector will continue to boom even after this pandemic. But of course, there will be a lot of other factors that need to be considered to further boost the growth of the industrial sector in the country, which leads me to our second question. How do infrastructure developments affect the supply pipeline and the occupancy performance in the industrial sector? So we can start with Patrick. Since one of your pipeline developments is strategically located near an airport, the Laguindingan Airport, but not within the city proper of Cagayan, what other strategic activities are being done by Ayala to improve the estate? And additionally, what impact do you see from the presence of the airport and nearby seaports in Iligan and Cagayan de Oro, along with your plans for a seaport within the estate?
Okay, I think we have to factor in the operations. In all our developments, we have to take into consideration the convenience or the needs of our partners, of our locator companies. It's not only for Laguindingan, but as you may have noticed, our Cavite Technopark is close to Cavite Gateway Terminal, a container barge port. It's merely 10 minutes away. Our Pampanga Technopark is close to SCTEX and just 10 minutes away from Clark. Laguindingan Technopark it's right beside the Laguindingan International Airport. So we take into consideration that when we consider properties for our industrial estates, there is some sort of it should be close, or there are critical infrastructures for the benefit of our locator companies or partners. But looking at Laguindingan, while we do have the Laguindingan International Airport, part of the master plan of Habini Bay will include commercial lots, residential developments. In fact, the municipal government, there's a plan to relocate there. And to support that, we'll have to include facilities on transportation. And that transportation includes land and sea transportation. There are now technical studies. There are studies being conducted to support our seaport, and hopefully we'll make this into fruition that will support not only the mixed use development, not only the township development, but also the Laguindingan Technopark.
All right. So it's actually, within the development, creating your own road networks, also boosting the transportation to make it more convenient for the locators in the techno parks. So while the case for Ayala is that of early movers, in the VisMin metros, there are already existing infrastructure we can maximize, as discussed by Francis also a while ago, For Cebu specifically, there were 2 ports mentioned in the pipeline, showing that the metro anticipates the need for larger capacity, which developers can capitalize on. Aside from this, we have the ongoing development of CCLEX, the Cebu Cordova Link Expressway, which looks to offload traffic from Lapu-Lapu and Mandawi City to Cebu City. Sir Felix, how do we see the movement and development of industrial parks following these developments or infrastructure projects? Do we also see industrial growth in Cordova area?
Yes, very nice question and a very laudable one. I would really say, Cebu, as what we may all know, has a very different geographical landscape. Cebu by nature is in a coastal area. Cebu City is what, 60 kilometers radius only. That's the main island of Cebu, where the progress is, the market is. But you have to remember, the port of Cebu is in Cebu City. The industrial zone is in Mactan originally. So you have to pass from Cebu, you have to go to Mandawi, the second city, where the first industrial park before MEPSA was. That's where all the the factories are. In the early 70s, MEPSA 1 started. That's how we have the first bridge. After 20 years, that was not enough. We created the second bridge. In the early 2000s, the second bridge started to overload already because of the fast industrial expansion of Mactan with MEPSA 2, then with the Clips, the light industrial park. As of date, I would say there are more than 300 companies all over together. But the nice thing here in Cebu is we have a mixture of activities involved. You can work, live, and play. If you are a company in MEPSA, you manufacture goods, you work. You can live. There's so many subdivisions now. Play the best. You have what? 135 resorts all over Mactan. So it complements each other. It's the matter of how Cebu was planned and designed. Going back to the south, the Cordoba Express Link. The Cordoba Express Link was formulated under a PPP project of the government, private-public partnership project, together with the MDP group, the PLDT group. No? It is to unload the traffic of Cebu, Mandawi, going to Mactan. So those from the south will have to just use the third bridge. Why do you have to go to bridge 1, bridge 2 before getting to the other island? So 100%, and with the advent of the development by next year of the reclamation of Cordoba, that's more than 1,000 hectares of reclaim project that may start next year. You will see a lot of activities there for sure. Now, with the new international port in the north, in Kansanga Bay, that will envision that all international vessels will pass by there and unload their cargoes. And the fourth bridge, as what was explained by Francis ganina, na there is the fourth bridge in the works now, in the pipeline. And I am pretty sure by next year, that will be online already, the fourth bridge. So with infrastructure, logistics, even as what you said, Ruth, since you were here since the lockdown, I admittedly say retail stores are closed. Online sales went up. It hit the peak. It really did hit the peak. But when it comes to logistics, there was no stopping in logistics. Logistics has to move. Even though if you are from Manila, your goods has to pass Cebu. You have to remember, from your goods from Manila going to the whole of Visayas will have to pass through Cebu. the shipping line industry in the Philippines is based in Cebu. Logistically, domestic shipping comes to Cebu. International port, raw materials passes through Cebu. Manufactured it here, then transshipped to the other parts through Ro-Ros. Cebu, from Region 6, 7, and 8, is now connected through Ro-Ros. If not through bridges, it's through Ro-Ros. You can be in Cebu to Dumaguete in what, 4 hours, 5 hours? You can be in Cebu to Bacolod. You can just take the Oslob Santander route. You can go even to as far as Siquijor in the west. No, from Dumaguete, there's another barge that goes to Siquijor. No, you can. It really is connected. Then from Siquijor, you can connect to Dipolog. Daga, you're now down all the way to Mindanao. No, we can connect with my partner there, Jan. No, in the business sector, we can connect each other. No, it's the nautical highway that is making the development of the Visayas. Don't say particularly Visayas. We need Visayas and Mindanao to connect each other. Luzon is probably farther. That's 680 nautical miles away. But from Cebu to anywhere in the south, we're fast. We can be connected through bridges and through Ro-Ros. Industrially, economically, through finance, no problem. We have all the kinds of banks here. We have all kinds of financials here. Education, top tier. Everything is here in Cebu. So it is in any part of the VisMin area. Resources, we have. Investors, no question. All we need is the health. The health is still the most important thing. We have to drum up the conscious, the health, the confidence of everybody. As of date, I can say in Cebu we are 80% online now. We're now back 80%. We are far away from where we were started in March when we were locked down. Everybody was staying at home. Now everybody's trying to go out. But the only thing is limited with the local LGUs, with the strict laws and everything. We're still limited in going out. We have to do a lot of protocols, even in our workplace. We have to do protocols. That is one thing we have to be important. No, I will always say health is always wealth. So as what you said a while ago, Ruth, industrially, if everything is in place, industry will thrive. Business will just come in. No, people will just look. We have everything here. So that's it everywhere. International port, seaport, you name everything. It's all here in Cebu. Thank you.
Actually, Ruth, if I can echo
Sure.
what
Yes, please.
what was mentioned earlier, which is why we're in a good. That's the one advantage of our location, because Northern Mindanao is the gateway to Mindanao. So from the Visayas all the way to if you want to go to Mindanao, then you have the Northern Mindanao as the gateway to that. And if you look into the Minda development corridor, Northern Mindanao is the industrial and trade cluster. Industrial.
Yes.
And you can see there PVDEC, El Salvador, Cagayan de Oro, Iligan, and that's the beauty of it. We are in the middle. We can capture Iligan, can capture Cagayan de Oro, and we are just 15 minutes away from 15 kilometers away from El Salvador. So echoing from what was mentioned earlier, and that being the gateway to Mindanao, you can capture the Visayas market.
Yeah, and that makes it easier for other businessmen to locate in Visayas and then eventually expand their presence to Mindanao because of the connectivity and all this infrastructure developments. Really, really exciting times, no? So, I would like now to proceed to our third poll to dig deeper into the industrial sector. Given that these industrial projects developments are in place or are ongoing, what do our audience think would be the preferred industrial offering in the future? So Wow, 76% from the audience answered ready-built warehouse. So a lot of people now are looking for ready-built warehouse, as followed by industrial lots, and then build-to-suit facility. Okay. And I think it's also one of what the offerings, the available warehouses in Cebu, the available industrial parks in Cebu, the warehouses compounds in Davao are already offering. And then with Lagindingan, you'll be also building this ready-built warehouses, and will also be offering industrial lots for lease and for sale, right?
Yes.
So these are some opportunities, facilities, or type of properties our audience or our attendees here can take a look into. So proceeding now to our third and last question. I hope we could still, extend this roundtable discussion, because I personally, I'm getting a lot of insights from our guests now. But proceeding to the third and last question, what are the challenges and opportunities that you are currently seeing in the industrial sector? What changes, if any, have been made to your strategies or plans moving forward, or what can you recommend to the industrial players to consider? So I'd like to start off with Sir Patrick.
Going back to your poll, to the poll earlier, I think that is a testament that we are in the right direction. You mentioned about lot sales, about ready-built facilities. So yes, that's encouraged to hear that we are actually on the right direction. But to answer your question, yes, the pandemic certainly caused mountains of challenges to businesses. But if there's one thing that there are a couple of things that we are able to get from this pandemic, the need to innovate. And while it is challenging, the mindset will remain to be, once this pandemic is done, are we to ease, to immediately bounce back and hopefully grow. So, which is why we at all HC, AyalaLand, continue to offer opportunities. And we are actually aligned with what's happening right now by offering flexible packages, flexible opportunities, so that locator companies can still have that mindset towards the future, that hopefully they can bounce back and grow in it. Let me just go back to what John mentioned earlier, and echoing from that, we have to focus now on business continuity plans. We can't be in a single central location. We have to be located off-site to ensure that our businesses will continue to operate moving forward. And lastly, one of the advantages of being a mixed-use community and focusing on Ayala, it should be an integrated use development wherein all other uses are there, and it will be a sustainable development. So, and lastly, even in the industrial park, it also evolved. Back in the 1990s, we used to have plots of 20 hectares, 10 hectares. But as we continue to evolve with what's happening right now, we have been flexible as well. Before, we are traditionally Philippine economic zone registered development. We have now have two BOI registered domestic industrial zone. We offer non-PESA developments, because of this, what we have learned with the market, we are also able to adjust according to their needs.
Adapting and innovativity is really key, right? So, Sir John, what do you think?
Your microphone is off.
Well, there are two opportunities I can identify. One, again, is the infrastructure, because where there is public infrastructure, private developments follow. And we all know that from history. Secondly, the CREATE bill, which will develop tailored incentives, particularly the kind of incentives that benefit local manufacturing. Because historically, a lot of the incentives being offered by the government have really been focused on export-oriented industry. So I think this time, there is an opportunity now to develop incentive packages for local industry that can dovetail on the infrastructure. So I think the mix of those two opportunities are a driver for interest in Mindanao. So I think the brokers here will need to take note of those two things when they make their pitch to possible manufacturers. The challenge, of course, is promotion, and that's what I've been adamant in pushing. Promoting industrial properties and developments and industrial opportunities over the next 2 to 3 years will be really important. And as a local chamber of commerce, as a local chamber of commerce president, that is something I'm dedicated to.
Thank you, Sir John. What about you, Sir Felix?
Yes, it really is and really was challenging in Cebu. As when the pandemic hit Cebu, the government declared closure March 24 and onwards. All businesses went to a halt. You see hundreds. There were almost 100 new buildings on construction, condos, housing, buildings, and etc. Everybody put to a halt. But there's one sector that did not stop from construction. The warehouses. I think Patrick can attest to that, no? And Ruth, you were here during the pandemic. All residential and huge construction developments by multinationals, I say Ayala or whoever, everybody went to a standby mode. But the warehouse industry never stops. Sometimes I was so amused, although we have border restrictions. So remember, we cannot cross Cebu, Mandawi, but yes. It just so happened that I do get a, what you call that, the Apor pass that I can go through. The chamber is considered as a front runner because of the business involvement to bring in the economy back. I was even shocked and saying, why is this 10-hectare warehouse still under construction when in fact no one is on construction? The owners of these industrial parks, these huge warehouse parks, house all their employees inside. Don't go home. You don't go home. You work. Right now, 6 months after, you can see them everywhere. Up in the north, down in the south, in Mindanao, in Naga, as what Francis was saying a while ago. Developments are high. Up in the north, in Cansaga, in Liloan, in Compostela. It went as far as Danao. Even in Bugu, if you go to the up north of Cebu, you can see warehouses being constructed. Everybody is readying for the comeback of the new norm. Warehouses are very easy and very fast to repurpose. It's just a square thing. All we need, as John says a while ago, all we need is to redesign because it's just a square thing. And prices of warehouses has been steady since the lockdown. It used to be very high at almost 300 pesos. Right now, there are warehouses that are even going out for rent at 150, 180 because of the bullish economy. But everything is going back. We can say if China is now back on hand, we have the raw materials. What, 70%, 60, 70% of raw materials comes from China. And everybody is bullish. So we will say economic activity, everything is intact in Cebu. Infrastructure. You have the international port. We have the international airport. We have the resorts. Work, live, play. That's the best we have in Cebu. That good.
Thank you, Sir Felix. I'm actually excited to go back to Cebu again.
Please do.
Yeah, sana this time I'll be able to explore na
You
further.
explore
Yeah, the
further.
resort. Yes,
Explore
yes,
further.
yes.
I bet Francis has been there up to the north and down. Let me know when you're here again. I'll go with you.
Will do. All right. So what a very insightful discussion. Thank you very much. This gentleman just gave us more reasons and proves that the industrial sector has been very resilient and will continue to thrive even in the new normal. So with that, I'd like to thank again our panelists, Mr. Patrick Avila, Mr. John Tria, and Mr. Felix Taguiam for generously sharing us your thoughts about the opportunities of the industrial sector in Visayas and Mindanao region. Connor?
Wow, guys, thank you so much. That was fantastic. So much great information from some of the experts in their respective industries and areas. So again, I've said it before, I'll say it again. I hope you guys at home or in the office, wherever you are, were taking notes because this is some information you won't find anywhere else or from anyone else. So again, thank you to all our guests. Ruth, thank you so much for hosting our panel discussion there. And you know what, I share the exact same sentiment as you, Ruth. An hour and a half is simply not long enough when you've got the information that we have here. So hopefully we can do this again and we can all expand further and we can learn more about the opportunities in Visayas and Mindanao. So that concludes our panel discussion and that just about wraps up today's webinar. It's been an absolute pleasure to have the esteemed guests with us, Ruth, Francis as well, and everyone at home. Again, thank you so much for joining us today. I'd just like to finish. Thank you so much. I would just like to finish just quickly. I think we've got around 2 minutes left before it cuts out. I did mention a little bit earlier that actually we will be producing and releasing a comprehensive report on the Cebu and Davao's industrial market. So we'll make sure that we post the link alongside or in the chat to that or whenever it's ready to be posted. So keep a lookout for that and keep a lookout for our future webinars as well. I hope you've all enjoyed today. I certainly have. And this will not be the last time you hear from us. So I would just like to, I guess, close out. We have 2 minutes. So I guess I'd just like to go around everyone. And again, we have 2 minutes, so maybe we're looking at 20 seconds each. Is there any closing comments that anyone would like to add? We'll start with Felix. Anything you'd like to share just right at the end?
Yes, thank you. Yes, partners, I will call of you partners here. No, once you need more info about Cebu, please do give me a call. Email me, text me, Viber me, do anything, whatever you have. I'll give you the info. Especially, John, the last time we met was pre-COVID. Hope we will meet soon if there are flights together. Thank you. Cebu Chamber is always open for everybody. Yeah.
Of course, that's great to hear, and I hope everyone is listening to that. And I'm sure your phone will be buzzing all night long with questions and inquiries into Cebu. We'll follow on quickly with John.
Yeah, same here. In case anybody's interested to look into industrial development, feel free to contact me.
Yeah, of course.
Fantastic. Thank you so much, John. And finally, Patrick, we'll give you, I guess, the closing remarks.
Okay, thank you very much again for the invite. It's an honor to join this webinar. But very quickly, it has to go beyond AyalaLand Logistics Holdings. Basically, being a partner, a catalyst in progress. As we help our locators build their with their business, have their business, at the same time providing it's a platform providing opportunity to the and lastly, just like in other Ayala development, our properties in industrial segment is valued over time. And you have seen this in the likes of Laguna Tech Park, and we hope to work with you in one of our technoparks in the near future. Thank you.
Thank you.
Fantastic. Okay, guys, thank you so much. And look at that. We are 20 seconds from the 1 hour and 30-minute mark. So that is perfectly rounded off today's webinar. I will one last time thank everybody for joining us, to our esteemed guests, Ruth and Francis from Prime. Guys, please make sure you stay safe, stay connected. And
keep in touch.
Of course. Thank you so much. Take care, guys.
Take care.
Thank
Goodbye.
you.
Thank you.
See you.
Thank you.
Patrick. Thank you.
Thank you.
Jan, Francis, Ruth, Connor. Good day. How do we lock